Of course, this is not financial advice and for entertainment purposes only. Investors, we have a very special guest, Mr. Bobby Kim. Now, I found Bobby from Blossom, which is a free investing app. It shows your portfolio, your trades, and we will link it down in the description of this video and in the pinned comment section. Bobby has a $1.7 million portfolio at 28 years old, only ETFs. He has over $440,000. Yes, $440,000 in ULTY by YieldMax. And I'm assuming over $500,000 in SCHD or more. Can you confirm that, Bobby?
Yeah, it's over half.
So in this video, we're going to hear about Bobby's story, how he got started to invest, everything about his investing portfolio, ULTY, SCHD, and just his whole story with investing. So my first question for you, Bobby, is can you introduce yourself and give us a brief overview of your investing journey and how you got to where you are today at 28 years old, $1.7 million. It's an incredible story, so I want to hear it.
Yeah, so I run a marketing agency where I work with romance authors mainly. So if you see their books on Amazon, Barnes and Nobles, bookstores, we basically run a lot of ads, so push them out. I started investing back in 2020 with a retirement account at the time, and I got really lucky with the dip during COVID. That year was the first year because I bought the dip. I ended up making like 50% off of I think it was like 50K I put in, and I ended the year at 75. And every year I just put in what my accountants suggest. It wasn't really until 2021 where I got really serious about investing money, and I first got really started with crypto. I think crypto was kind of what taught me, how to read like balance sheets, how to understand why people buy what they buy, where value is being generated. So I got started with that, and I learned a lot of mistakes because I got burned really, really bad where I lost over $250,000 in 2022. From there, what happened was I just went back to work in my business, and it wasn't until I would say about 2025, so earlier this year, there was a project that I got in years ago that ended up doing it's like a 4200x basically off of $500. So that's where like the bulk of my investing money came from today. That was like the biggest one I had. So I cashed all that out. I ended up having just over 1.7 at the time. I paid my house off, and yeah, pretty much I rolled it up this year into my brokerage account, and I bought at the top before Liberation Day. So I'm just above where, with the new all-time highs with the S&P 500. But that's pretty much how I started and how I got to here.
Now, I'm looking at some stats from Blossom from your profile. The largest ULTY dividend was $6,716.20 in 1 week.
Yeah.
Now, in June, you had over $20,000 a month in dividends, with ULTY paying out a consistent like $6,500. Now, let's go into your holdings. 31.5% to SCHD, 26.3% to ULTY, 11.4% to VYM, 10.3% to VU, 10% flat to VGT, 7.9% to VUG, and 2.6% to VTI. Now, my question for you is, can you give us a rundown of your portfolio in terms of why you have the holdings, for example, to SCHD at the top, then ULTY second, and then everything else is kind of like Vanguard, long-term, growth-oriented ETFs, and even like the type of investing accounts you have. So like, I don't know if you have like a 401k, like a business 401k, or Roth IRA.
So my taxable account, I have a joint account with my wife. It's around 1.55, and then the rest are just our SEP IRA accounts, HSAs. So that's basically it. As far as how I put the portfolio together, so before this year, right, before I had my really big win, I used to just put money into SCHD, VU, some towards VTI, but when I never really had to build a taxable brokerage account until this year, like heavily. And one of the reasons why I leaned heavily towards SCHD is I actually tried building other like dividend portfolio, like allocation wise. And I just couldn't really put something together that was on par with what SCHD was already doing. one of the reasons why I'm so heavy into it is despite the whole reconstitution this year, I do think energy and consumers, retail and healthcare, I think usually it's going to rebound, right? It's either growth is going to be the narrative in the market or we're going to have value investing, right? So it's more of like a hedge in case the growth stocks take a big dip, especially tech. After what we saw that happened earlier this year, SCHD is kind of like my anchor point in a way where I know, even if the returns might not be the best, it's not going to lose a whole lot of value when markets go down. So that's one of the reasons why it's very heavy. I have been rethinking lately, though, whether or not it's a good idea to have that much in it. But because I just started really investing heavily this year, I haven't really made any other decisions as to like how I want to allocate the dividend portfolio allocation.
The math is like $20,000 a year in
Something
dividends
like
from
that.
SCHD. You were to cut back on SCHD, maybe sell shares, maybe just stop investing in it. Where would you allocate that extra money?
I think I need to put more in BTI. So when I first started putting the portfolio together, I sort of told myself, as long as like I believe in the thesis, right? Because a lot of the picks I have, especially for SCHD, is just the whole thesis around, high dividend growth, and they've been building it up and they've had a really good track record since its inception, except the last couple of years it's been a little bit slow. But the thesis just makes sense to me. And as long as it makes sense to me, I don't really want to have to sell the position necessarily. I'd rather just make more money and put it into existing positions or open up new positions. But if I had to reallocate it, I would probably short more on VTI because I don't have a whole lot on VTI.
Now, what brokerage do you use?
I use Fidelity.
Do you like them a lot?
Yeah. So crazy story is I don't really dress up a lot. And when I first went to Fidelity, because I didn't have a lot of money with them originally, I remember after I had that big win this year, I went in there with a cashier's check it was for 1.25 million at the time. And I remember going in there and I was wearing baggy clothes and like gym shorts and slippers. And I went in there telling them that I want to deposit this cashier's check. Most people at Fidelity, if you go to their branches, they're all like old people, right? So I went up to one of the guys and explained that, my wife and I, we don't want to wire the money because we're worried we might mess up somewhere. So we wanted to deposit a cashier's check, right? So I hand him the check and then I turn around because I have to log on to my Fidelity account. He ends up coming out. Oh, no, a different guy came out because I guess the guy gave the check to someone higher up. So this other guy came out and was wondering who this check was for. And the first thing he went to was the old man sitting in the corner. And he's like, "Oh, hey, sir, was this your check that you wanted to deposit?" And he's like, "Let me look." And he looked at it and he was like, "Oh, no, that's not me." And I was like, "Oh, wait, no, that's us." And I'm the guy wearing the baggy shirt, like gym shorts and flip flops. And the first check I bring was for 1.25, So after I gave him the check, and I opened up the account. Because I opened up a joint account to put the money in. The boss's boss came out, and I immediately got they call them financial consultants or like account managers. And I remember Wells Fargo because that's who I bank with as well. They were fighting to try to keep the money. Like they wanted me to invest into their note products. I mean, it was crazy, but yeah, Fidelity's been really good. They've treated me pretty well. So I've been with them since I used to be with TD Ameritrade, but then they got bought out by Charles Schwab, and I didn't really like Schwab's interface as much, and I wanted something different, and Fidelity has just been great.
Why only ETFs?
I'm really busy with my work. So for context, with the marketing agency we have, we're a multi seven-figure agency. We have like over 50 clients that we work with, and it's just busy all the time. And I don't really have a lot of bandwidth to handpick a lot of stocks, see how they're doing. The reason I really went heavy with ETFs is if I go with like a market index, like VU, which tracks the S&P 500, or if I do VTI or VUG or BGT, it's very simple enough where I understand like, oh, like this is the basket of stocks that they're holding. And especially with like SCHD, because they do the reconstitution every year, I don't have to really put a lot of bandwidth to figure out what I want to do. Like I know I want broad market exposure. I don't want to hedge everything on like one single stock because back in 2022 with my lessons in crypto, I had this all in mindset where I would just go all in on all these projects. And it did work a couple times, but I ended up losing pretty much everything. That taught me a lot. And that's one of the reasons why I kind of stray away from anything that's just single stock, and I just prefer an ETF, like having a basket, having a sector or category, like just having broad exposures. To me, I'm at a stage in life where I really want to protect what I have and not be too aggressive. Unlike my peers, like I have a couple friends that are like all in on Nvidia or Amazon, Google, Apple, right? But I'd rather just roll it up with BGT and just let the market do what it'll do, basically.
You have over $440,000 in a YieldMax ETF, which
Yeah.
is a newer issue on the street. People would say that's high risk because you just said you want to protect your money, but ULTY has been performing, pretty well in terms of a total return standpoint because if you look at the charts. So my question for you is what got you into investing in ULTY and why did you add it in your portfolio?
So I originally started with MSTY. Uh, I hang around in a lot of Reddit subreddits, basically, and like end of May, early June. There was a guy that posted about his MSTY and how he bought in at the very beginning, and he has house money now. I have, at least with crypto, I have understanding as to like how it works. But my biggest jive with crypto is how a lot of it really isn't backed by anything, right? So MSTY got me interested just because it did make sense that they're capturing volatility on MSTR. So I originally bought MSTY. I think I got it at like $20.60 at the time. This was like June 5th, I think, or June 4th. It's just trading on volatility. And I was looking at the IV, for MSTR, and I noticed it's dropping off. Like I knew, like, because the dividends are all, or distribution, so to speak, is very closely tied to the IV. I was a bit worried. I'm like, well, I don't know if it's gonna really hold up. And because MSTR has stabilized a lot, because Bitcoin has also stabilized a lot, and because Michael Saylor, took out he had that raising funds, to continue to buy more Bitcoin. I can't. It's really hard for me to see a whole lot of IV like volatility compared to where it was last year. So I was kind of worried because if the distribution rate drops or the dividend yield drops, then NAV's gonna drop too. So and because it takes a month to get them, the risk appetite with MSTY for me I wasn't as comfortable with it. But then I started looking into all the other offerings YieldMax had, and ULTY just sort of made the most sense to me because they have the underlying, right? It's like you do have something backing the NAV, whereas with MSTY, it's all synthetics where they have to do all these like call options. And I just like the fact that at least with ULTY, they do have the underlying, and that's where a lot of the value does come from versus just making all these, like bets. And because they have that diversified sort of portfolio where they can go after all these other higher IV like tech plays, it just made more sense to me. And they do have some MSTR in it. So roll in, like, I think I was like 420 at the time, something like that. When I looked at my portfolio and decided how I wanted to split it up, I was okay with at least 20 to 25% being like riskier plays where I'm okay, if things drop by 50%, it's not the end of the world. And then about 35% is on growth and 45% is on dividends, something like that. It's a high conviction play. I'm already doing well for myself. If I lose a couple $100,000, it's not the end of the world. And because I'm very disciplined this time with the portfolio allocation, I actually thought about selling SCHD at one point and putting it into ULTY, but I learned from the past because especially with crypto, that it's best not to go all in. Because I don't know what's gonna happen, right? It's actually backed by something for the NAV price at least compared to just synthetics, and I'm
Yeah.
a bit more comfortable with that.
With ULTY, were you looking at other YieldMax ETFs besides MSTY? Were you looking at YMAX,
Yeah,
YMAG?
I looked at YMAX, but stock like offerings is as appealing. And it's just I didn't want to put money in those either way. I mean, if you really look at it, there's only a handful I think that really spoke to me. If I wanted to do MSTY, I could always hedge it with Winter, but staying away from crypto not too heavily. I just don't want a whole lot of exposure because, I've already had my big win, right? Like I took like $500 to like 1.73 or something. And I feel like if I want more crypto exposure, I'm gonna just go all in or just put more into it. And I'm at a point in life now where I'd rather sort of protect what I have, but grow with caution. I think for ULTY, I initially, funny enough, for ULTY, I only wanted to put 100 into it at the beginning, and I think Todd Atkins, I think, right, talked about
Todd
this in
Aiken?
one of his recent videos too, about how you do need a lot of money for ULTY to make sense. And I kept thinking about, what kind of play do I see with ULTY? If ULTY does end up holding really well with the NAV and all the changes they've made worked really well, would I regret having 100 in, or would I want to put like 400 in, right? So in the end, it's a very high conviction play, but if it works well, then it'll work well, right? But at least I know if I need to sell it, if the NAV drops heavily, I do have that option. And I'm pretty sure I would sell it if it starts falling fast. So
Were you looking at Neo's products? Because those are really good ones for, they actually own the underlying as well. I know.
I did, but I don't want to have to sell any existing positions. So I usually lump sum my investments. So when I have more money to put in, I'll probably buy, like the Neos, because I did see those. It's just it was after I made my ULTY purchase, and I typically don't want to get into the habit of selling something just to chase something else. If I like it, but I just don't have the money for it at the time, I'll just wait till I have the money for it, and I'll just go after it then. Does that make sense?
Yeah. When you get your dividends or premiums from ULTY,
Yeah.
SCHD, VYM, VU, etc., do you just drip it right away? Do you spend it?
I'm actually holding on to it for the time being because I have a lot of taxes to pay next year. And most of the ULTY money was actually money I had set aside for taxes. So I'm actually just holding on to whatever's coming for the time being and waiting to see what the return of capital is going to be. I like I said, I am very cautious, but this is like a really high conviction play. And at worst case, if it goes, I don't think it's gonna ever go to zero, right? Because they own the underlying. But if the NAV drops 20%, it's not gonna really hurt me as much. Because I am setting more money aside for taxes right now. But yeah, the bulk of the ULTY money right now is actually money I set aside for taxes for like next April. So it's yes, I'm just setting aside the distributions that's coming in for the time being.
How does your wife feel about your portfolio?
It's we worked on it together. She's everything moves so fast this year. Like this year has been the best I've had life wise. She doesn't feel like it's real. I don't feel like it's real sometimes too. And I guess that's one of the reasons why I do have a dividend allocation, because when I was trading crypto heavily, because it's all unrealized, it doesn't feel like it's real. And I made a lot of bad choices and decisions where, I didn't sell when I thought I had to sell, because I always believed in the narrative and I wasn't looking at the market as a whole. She's comfortable. She likes the fact that, worst case, 75% of the portfolios towards, like S&P 500 or VGT or something that's like substantial, right? And that's one of the reasons why we're both more comfortable with ULTY than MSTY, just because the NAV at least is being backed by underlying versus just synthetics. So yeah, I would say on a comfort level right now, probably like an 8 out of 10. But as ULTY drips, more through, things might change. I guess how I feel about things will change.
You make a great living, and dividends, people would say, why are you making so much in dividends? You're 20 years old. You have 20 years to invest, 30 years plus. Why don't you go more
It's
all into growth?
when Liberation Day happened, this was like I had the whole portfolio set up before then. I was actually stressed for the first time ever, because it was even more stress in crypto because now I had something more to lose. A lot of the tech stocks, I remember I think I was down like 20% on BGT like at one point in the year, because I bought in, I think when the S&P 500 was at like 6,050 is when I kind of bought my allocations. Was like end of January. The dividends are what really helped keep me from not selling stuff, because at least you have something coming in. My goal right now actually is I do want to grow my dividend portfolio to where it's pulling in at least like 200,000 a year is my goal right now. Because at 200,000 a year, that basically covers like living expense. It leaves enough money to do things. I don't have to really work as hard if I die all of a sudden, right? Like let's just say, like I died tomorrow. I know at least with dividends coming in, it'll be fine. Everything will be sort of taken care of. So I'm at a point in life now where I really want to protect what I have, but also make sure that I don't have to worry about anything, if I like die all of a sudden. So it's one of the reasons why I want to build a dividend portfolio for my wife mainly, and it's like for family. Well, I'm not counting ULTY just yet because until I've like recouped it, I'm not really counting. I think right now my dividend just over like 30,000 a year, I think maybe with like all the other stuff I have. I'm still kind of far away from the goal. I would like to get to 200,000 a year without having to rely on ULTY basically. I think Neo's, JEPQ, JEPI, stuff like that. I think that would be a bit more like reliable in terms of my book in the books in a sense. But I think because ULTY is more of an alt, it's not something that I'm relying on, if that makes sense. Like,
Yep.
because we don't really know what's gonna happen still, because these high yield products are definitely new, right? So I think for the other covered called ETFs, I know that if they're gonna pay, let's say 8 to 12% a year, I think that's pretty reliable. But with ULTY, with how they've made changes recently, I'm not really counting on it right now, so to speak.
So everybody from, I guess, the history of ETFs, SCHD, VOO, Vanguard funds, Schwab funds, Fidelity funds, and then YieldMax is coming out, Neos is coming
Yeah.
out, Round is coming out. And you, maybe even myself, kind of fell victim. Like I invested, I have my highest position is VOO. I think I have like $138,000 in
Uh,
it. I invested like $2,000 in YieldMax ETFs, but I'm keeping my strategy of going in with like long-term positions because we both had different goals. I'm more capital appreciation oriented. You want kind of the best of all worlds of growth mostly and kind of that safer play of reliably sleeping at night with
yeah.
dividends and dividend growth. But you also have ULTY and whatnot. So what pushed you on the edge to go into ULTY?
It's more so it kind of pushes me to make sure I'm working hard with my business because there are points at times where like I can choose not to work for a week or two, right? Like I don't have to work because it's the business it runs really well. I have business partners that help keep it running. Sometimes I feel like I need something to keep myself accountable and keep myself going. And if I know that there is a possibility that ULTY's NAV could drop by like 50%, I feel like that's keeping me motivated to get up every day and to put time into my work and make sure that I can at least make the money back that I put in. If that makes sense, it's sort of like a way to keep myself going. Because back in maybe like last year, people work so hard to where they want to be able to retire, where they can take time off, where they don't have to, work 40 hours a week. Like I can choose to work less and I can choose to work more. But recently I felt like I've been stagnating. I've been feeling like I'm not giving it my all. So I feel like putting that much in ULTY sort of keeps me in check to make sure that I'm not getting too comfortable, if that makes sense. Like because just for context, okay? So I'm 28 and I've already paid my house off. I have 3 cars that I've paid off. I have
What kind of
1.7
cars?
invested right now, right?
Wait, what cars? I'm a car
I
guy.
have a C8, a Honda CRV, and a Chevy Express van. So it's like so I look at it like a work van, family car, fun car. At 28, I've already accomplished a lot, and I know I can do more, but I'm in a position where life is really comfortable, and there's no real reason for me to kind of push myself even further, if that makes sense. And I'm 28, right? Like if I wanna not work for a month or two, I do have that option. I just don't want to feel like that. I don't want to feel like I've already hit what I can at 28. You know, like I know I can keep pushing the business further. There's new things we're doing. My business partners are also keeping me in check with that much in ULTY, knowing that, you know, I might lose 50% of what I have. It kind of gets me out of bed like every morning and make sure that I'm at least keeping accountable to myself. That's kind of like half the reason why. The other half is just because if ULTY ends up working out really well and I get my entire capital position back, I mean, it's just house money at that point. And all the money that's coming in from the premiums and distributions, I can just accelerate my portfolio growth. So it's like a high conviction play, but it's also so that it kind of gets me out of bed every morning to just get some work done, you know?
Do you feel a certain way when ULTY dividends hit, SCHD dividends hit? Like, do you get a dopamine feel, or is it more like, oh, there's dividends, I'm gonna just reinvest it or use it for taxes?
I used to, because I guess for context, right? Like this year, just from the business, I'll probably make over seven figures, like after taxes, just from the business. And then I also had my like one big crypto win. So this has been like the best year ever. Like I'm definitely gonna make like more than two probably like after taxes. So it doesn't really feel the same as it used to. I know Alex Hormozy talked about how when you make your first $100,000, like you feel the richest ever, and then after that, it's just like, you know. So whenever, even though the ULTY dividends hit, it doesn't really feel like it used to feel because it's just, I just feel like it's a normal day now, which is weird to say considering like a couple years ago, like I was in like the worst position in life. So
Would you stop the business or maybe pull back and live off your portfolio, live off of dividends from SCHD and all your other positions?
I've actually tried, I think the most I've taken off like time wise off of working was probably like 2 to 3 weeks. And it just gets boring after a certain while. Like I've actually tried, like I've tried, like anytime I try to take a vacation or go somewhere, it doesn't really feel the same. So I feel like I always have to set higher goals because I'm so young right now, right? So my goal right now is I want to try to build a portfolio, not including ULTY, get to 200,000 a year in dividends through the boring traditional way, right? Versus if I didn't have that goal, I feel like I wouldn't know what to do because life for me is so different right now compared to most people. And I just feel like I want a goal where it gets me out of bed, right? So if I have, so for instance, for 200,000 a year in dividends at 4%, I'd have to have a portfolio of like over 8 million, right? So now my brain's thinking, okay, like what do I have to do to get to this stage? And then I guess when I get there, maybe the goalpost will change.
In terms of accelerating that goal of dividends, what people have been doing, at least with YieldMax and whatnot, is they're taking out HELOCs and margin and going into debt to accelerate the income. Would you ever consider that?
I actually thought about that, but it's just because I have a lot to lose now.
Yep.
I think if I didn't have anything to lose and I had like let's just say I had $100,000 to work with and I wanted to accelerate growth, I think that is something I would think about, but margin at the same time, while it can accelerate your gains, it can also accelerate your losses, right? So I honestly think for people taking margin right now, it can work to some degree, but like Jay talked about in one of the interviews, I think it was the one with you. I mean, yeah, he doesn't really recommend people doing that, right? Because it's an alt investment. Like, you know, things can go south, and if they go south and you're on the hook, you know, lives can be ruined. I remember even with crypto, like I saw people put their life savings into yield, you know, like yield farming products, and they lost everything, right? So it's definitely a question I've thought about whether or not to use margin. And I think for those who are comfortable with taking that risk, it's definitely an option there. I think for me, I don't think I would recommend people using margin. I think if you want to have more money to put into ULTY, you can either, you know, drip or make more money with your job or side hustles and use that to, you know, fund ULTY. I think that would be a lot safer in a way where if it, you know, if the NAV gets cut by 50%, you know, you're not on the hook for it. And margin can be pretty expensive. Even at like if I wanted to take $1 million margin loan, I think the interest rate I get from most like brokerages, it's gonna be like at least like 8%, maybe 6 at the lowest. That is still a lot when you think about it.
Are you looking to add any new ETFs along the way?
The one thing I'm sort of missing, because I know chips are going to be more important in the future. I think Fidelity has that semiconductor, it's like an open fund. I think it did like what, 40% last year or something like that. I have thought about putting money into that probably, as well as beefing up on VTI. And I want my ULTY allocation to actually be smaller percentage wise. So right now it's like 25% of my portfolio. I would like to put more money towards growth, dividends, maybe open up like a chip position and maybe get ULTY down to like 10% of the portfolio versus 25. I think more like on VTI. Funny enough, the reason VTI is the smallest position is when I was buying my original allocation early in the year, I miscalculated some of my numbers because I was buying them in like chunks, like with the orders. Like I did a whole lump sum in one day. And when I came to VTI to buy the position, I realized like, oh, it's not even 3%. Like, what did I do wrong? And I realized I put more money in VGT than I would have. So, but for me, I don't want to have to sell because if I get into the habit of buying and selling ETFs just because how I'm feeling, I feel like it's going to break discipline in a way. And because it's like, because for instance, with SCHD, I bought SCHD because I believe in the thesis and what they're doing, right? If I decide to sell just because the market turns south, I mean, what does that really say about the conviction I had originally, you know? I prefer not to sell anything after I bought it, as long as like I have like deep conviction into it. After I pay my taxes, whatever I have set aside left, like I'll just dump it into the market, basically.
I actually prefer lump sum more than DCA, but that's for another topic.
Yeah.
So you have VYM, VOO, VGT, VUG, VTI. Out of those five Vanguard ETFs, which one is your favorite and why?
I like VU the most just because this is S&P 500. It's simple. I think just S&P 500 in general has been the best. It's the benchmark. A lot of people have it in their portfolio. If you look in the last 100 years, I mean, it's done really, really well, considerably in the last like 20 years or so. So I think if I had to just pick one, I would probably just pick VU or anything that's like S&P 500 related.
What about one of SCHD versus ULTY?
If this is so, okay, if I had to pick something where let's just say I put $1 million into one of them right now, like if I had to just go all in, I would probably just pick SCHD still because like I said, I have a lot more to lose in life now than I used to then. If I had absolutely nothing and I just went all in, I didn't have to worry about like, oh, I have a house, I have a wife, we want to build a family. I would probably pick SHT, but if I didn't have any of that, then I'd probably be a DGen and just put it all in on ULTY.
1.7 million, 28 years old. From, I guess we could say, an investing standpoint. So, or even just a business standpoint, people are going to ask, like, how do I be like Bobby and have a lot of money and ULTY and SHD and
So
whatnot?
I dropped out of I used I went to community college for the first 2 years after high school, and then I went to SDSU for just over a year, and I dropped out. At the time, I was building a business and I was learning how I can make money with a high income skill. I think for most people in life, you really have to figure out something that will pay you a lot of money, right? Like a high income skill that you're happy to learn. So an example is, you have a lot of people becoming engineers or coders or programmers because like, AI, those AI, especially the AI boom, like there's a lot of tech related jobs. And even though it is diminishing some of the lower like junior development jobs, I think people who know how to code, how to build cloud computing or cloud architect or IT, anything that's like high income or sales, marketing, accounting, being a doctor, I think you really need to figure out what high income skill you're happy like honing in on, or whether it's like starting a YouTube channel, right, and getting really good at it. My belief in life, and I wish I did this earlier because back in like 2018, 2019, this was when I was like 21, 22. I was making like 200 grand a year at the time. Instead of like setting it aside, I actually went like balls crazy for a couple of years. Like, I mean, it was fun. Like I traveled the world. I went to different places, like, Airbnb, hotels, food, all that stuff. But when I added up how much money I spent in my early years of life, when I finally started making good money, I probably wasted a couple $100,000. So the second stage in life is after you learn a high income skill is, you want to have a house. I would have a couple cars if, you can afford it and pay it all off. Maybe have a $500,000 to $1 million invested or set aside where it's liquid. And then after that, then you can do what you want to do. So this I didn't realize this till maybe this was like after I lost everything in crypto back in 2022 was I was looking back and reflecting on the decisions I made in life. Just had a lot of fun, but I didn't really set aside anything. So I guess for people watching, just learn something that will make you a lot of money. Don't carry a lot of debt that you don't need, and just stick to it for like 5+ years, and I think you'll be fine.
How do you think you're going to react, or how have you been reacting if, let's say, the market goes down 20, 30%? I'm assuming ULTY, because it has that risk of the market, it will go down as well. So how would you react in a bear market?
I paid my house off in like 4 years, and I actually had a really good rate. I bought my house. It was back in 2021 for 2.75%. And I paid it off, and I think the mortgage at the time was like just over $400,000. And I know a lot of people would say, why did you pay it off? You didn't have to do that. But because I've paid the house off, if my portfolio goes down 20%, I'm not really stressing because I don't have to worry about losing a house anymore. And it's the same thing with the cars, because I paid all the cars off. I don't have to worry about, oh, like I have to get rid of this car to make my mortgage payment because my portfolio is down 20%. Because I also have that dividend allocation, and I know some money's gonna come in every year from it. If the market goes down 20%, I don't think I have to really stress about it as much, right? Compared to like most people, right? If I think most people would maybe panic if, imagine like you have car notes, a mortgage, and you put most of your money into the stock market and it's down 20%. Like I'd be feeling nervous, but because I don't have any debt now, it doesn't really bother me. Like I can just sleep at night knowing like, oh, it's just what it is.
Dealing with taxes, because you're earning so much income from your ETFs. We have over $20,000 a month for multi, and what, $20,000 a year from SCHD. And I'm assuming about
30, I think, with everything, like the
30.
dividends,
Yeah.
something like that, like 30, yeah.
So how do you deal with the tax implications? I know most of your positions are qualified income, so
Yeah.
lower tax rate, but you're at a super high tax bracket.
Well,
So,
so I'm already at the highest tax bracket, even though
yeah.
I'm married, right? Like, so it's not really a problem if you think about it. Like, I can't. I'm already at the highest tax bracket. Like, what am I supposed to do? So it doesn't really bug me. I think for most people, I know most people make the argument about how ULTY distributions are going to be taxed, short-term income tax or short-term gains, but if you have to pay a lot of taxes, you're still gonna make a lot of money, right? I remember earlier in life when I was like first starting my business up, I used to try to expense everything I can because I thought like, oh, like this is for the business. I need this, I need that. And then my accountant sat down with me and told me, Bobby, just because you expense it, it doesn't mean much because you're not going to keep a lot of money in the end. Like all you're really getting is like, I think when you expense something in the business, it's like I save like 35 or 37%, right? But he's like, look, like if you just expense a lot of things, you're not going to keep a lot of money if you think about it. So I think for people that are not at the highest tax bracket, but they're worried about paying, like what is it, like 35, 37%, like marginal, like short-term income tax, it's not that big of a deal because you're still making more money than you would have.
Yeah.
I do have some in my retirement accounts, ULTY. I think I have like I think out of the 440, I think like 310 or 320 is in my taxable and the rest is in my retirement accounts. Yeah, it doesn't really bother me because I'm already at the highest tax bracket. I mean, I didn't imagine I'd reach this point in life now. Like, I always thought it might be my 30s. I think if I didn't have that big windfall, um, just I think the first thing is just pick what you truly believe in, and it's not something you would sell when things go south. So an example is like when you buy a car. I know there's people that buy a new car like or they change cars like every couple years or so, right? I used to have a 2006 Ford Focus that I kept for like 3 years, and the engine was dying. It wasn't the best, but it was a good car, and I didn't have to change cars like every couple years. I think it's the same thing with stocks. I think Graham Stephan talked about how he would ask who the person he was 3 years ago, like the decisions he would make. So when you pick like ETFs, stocks, and you read through the thesis and you spend weeks and weeks researching and you truly believe in something, you kind of have to stick with it. It the moment tough times happen, but if the thesis hasn't changed, just don't sell, right? Because when Liberation Day happened and the stock market took a hit, I mean, there's lots of people that sold, and I thought about selling at the time too, because my VGT position was down 20%. VU was down over 10%. I think I was down like 15% for the year at the time. And this was after I had that big windfall, and I was like, man, like, should I sell? Should I not sell? As I calmed down and thought about it logically, I'm like, look, like I picked these because I believe that these are really good picks. And just because something happened in the market, this month or next month, it doesn't really make sense to get rid of it because nothing fundamentally has changed, just like external forces. So anytime something bad happens, just sort of assess, like, look, like, why did you pick these stocks? Why did you buy it? And, oh, I bought it because they're reliable, they're rated well. I believe in the companies and these ETFs, so I'm just going to hold it. So I think that's the first thing, is you just have to have like conviction. It's the same thing with like whatever you buy, right? Like people buy what they buy because they believe in something. I think the second tip would be, I wouldn't be a maxi. Like I wouldn't say dividends is the only way or growth is the only way. I think they both work well in certain situations. Like I'm not gonna tell a guy if someone's 100% growth and they just want to be 100% growth and they just don't see dividends working for them. I think that's perfectly fine. I know dividends get a lot of flack from growth because it's just not moving as fast. I think there's a good time and place for both. Does that make sense? I wouldn't be a maxi. Like, I don't think there's only one way to accomplish something, right? Budgeting, budget money from your job. So for me, like I said, like earlier on in life, like I was making really good money and I just blew it all on like food and like traveling, hotels and whatnot. I remember buying watches, and then I realized, like, why did I spend like I think I spent like 25 grand buying like two Rolexes or something at one point, and then I ended up selling them, and it took me a good couple years to realize, if you really want to be wealthy in life, like you have to keep what you make. I think for anyone who's trying to get to their first 100,000 or $500,000 or $1 million, be locked in, especially with the way the economy is and how life is. Like life's hard right now.
Where do you see yourself in a decade or 2 decades from a portfolio standpoint
Yeah.
and I guess a lifestyle standpoint, because you're going to be making, hopefully some good money from your business and from income from your portfolio doing well. So tell me, where do you envision yourself in the next decade or two?
I think I would like to get my portfolio in 10 years time, maybe. I'd like to get to 10 in the next 10 years if possible. I think that's definitely like there's opportunity for it for me right now. 20 years from now, maybe like 30 to 50 through just investing in the markets, and maybe I'll start another business. Like I don't really know. The one thing I'm doing right now is like I don't touch real estate actually, surprisingly, because I like to stay as liquid as possible, and real estate just isn't something for me, where I think it just takes too much time out of my day to manage at where I'm at right now. And even if I had property managers and all that, like, because my dad has real estate, my dad has a couple like houses in his portfolio. It's just a lot of like problems. So yeah, I think in like 10 years, 10, maybe 30 to 50 and 20, like I really don't know, but I would definitely want to hit. There's a clip where Jamie Dimon tells Adam Newman. So Adam Newman only had $44,000 in his bank account at the time, but he was worth like billions of dollars on paper. And Jamie Dimon was basically telling him that he's hit what people call like ultra high net worth individual. When I first went to when I first had my big like win and I got the cashier's check, dude, like people like it was crazy how differently they treated me, even though I was wearing like baggy clothes. And I think I would definitely want to hit what Jamie Dimon said, like UHWNI, like ultra high net worth individual or something. I think that's just, I don't know. I think that'd be really cool, like life, like status or something, like kind of like
Yep.
a milestone to hit. But yeah, maybe. Like I think to hit that, you have to have over $30 million or something like that. So I think the biggest thing is make a list of questions that you have, whether you choose to buy ulti or not, or whether you choose to hold on to it or not. And even though something better might appear or materialize, it's I wouldn't jump ship just because, like external forces have changed, right? I think ulti fundamentally, business model wise, from what Jay's doing with it, makes a lot of sense to, the product that he's built that people want. I wouldn't, if you truly believe in something and you've really thought it out for weeks, making any new decision shouldn't be like, instant, right? Because if you spend weeks and weeks and weeks really thinking about something. So again, if you choose to buy, you choose not to buy, you choose to hold, or you choose to sell, I think any decision you make shouldn't be made lightly, if that makes sense.
Now, that's it for today's episode, folks. Thank you guys so much for tuning in. And Bobby, do you want to plug in any, your business, Instagram, X? I know that we'll have a B-roll of all your handles and whatnot.
Yeah, on Blossom, it's Real Bobby Kim. Same thing on YouTube. I don't have a YouTube channel, but I don't know. People that ask me to make videos about certain things, so I don't know where it'll go, but I'll plug it in for you.
Definitely. Now, thank you guys so much for watching. If you guys like this video, please give it a like because this cute puppy did. And go ahead and check out our last interview with Mr. Jay Petrocelli right here and or right here. I love you guys so much. Crushing the stock market and take it easy. Peace.